Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, December 21st, 2023. As always, we'll start with our executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to actually do about them in your portfolio, you need to be a client of 42 Macro. So number one, as predicted by the 42 Macro corporate profitability model a few months ago, NIPA corporate profits, which is the broadest measure of corporate profits in the U.S. economy, accelerated sharply in the third quarter and increase the probability of a soft landing in the U.S. economy. Number two, the reason this matters to determining the sustainability of the current Goldilocks top-down market regime is because any data that meaningfully supports either the hard or no landing scenarios is a key market risk. These data very clearly support the soft landing scenario because improving corporate profitability reduces the need for corporations to cut costs and or pass on price increases to customers. Number three, lastly, U.S. corporate balance sheets remain as healthy as they were when we highlighted such dynamics amid authoring the resilient U.S. economy theme last summer. U.S. corporations were always in a position to weather policy tightening far better than the macro gurus insisted upon forecasting. Transitioning to my 42 macro dashboard this morning. So in terms of the key macro market indicators, we're getting the overbought signal in the VIX here. So just be aware of that. It's obviously kind of a very narrow range coming off a very low base. We'll see if we could start to kind of blast through the upper boundary of that range. It's probably an indication that the medium term trend might be at a risk here. But you have a neutral short-term momentum, so that's definitely telling you that volatility is probably as low as it's going to be in implied vol terms, as it's probably going to be, over the very near term. And I think that was it in terms of overbought and oversold signals. Yes. So we'll transition to our 42 macro aware community. We're getting a question from a subscriber. Is it possible to quantify the likelihood of a soft versus hard landing? Thanks. So just sourcing my own response to the subscriber the other day. I don't believe in putting, sort of hard, specific probability, hard numbers around, probability assessments of future economic outcomes. And here's why. There's a couple of reasons why. Most of the time you hear those things, they're pretty much made up. They're not based on any real rigorous statistical analysis. And the reason I say that is because we know they cannot possibly be based on any real rigorous statistical analysis because we simply lack enough insights, enough data points in terms of economic cycles, enough data points to understand, where you are in the business cycle. The business cycle itself is something that's only really been studied for the past 100 years. And we really only have data for about 40, 50, 60 years, pick your indicator, for really understanding these business cycle dynamics. And obviously, even less than, you counting on, one or two hands, the total number of business cycles we have actually data for. So whenever someone says, well, I think there's a, X specific probability of achieving this outcome in the economy, you have to take it with a massive grain of salt because ultimately, again, there's really no foundational basis from a statistical standpoint to get that precise and specific with the number. That being said, we do, help investors understand, what that distribution of outcomes might look like, without being overly specific. And one thing I'll say is that, something we talked about in our December macro scouting report a few weeks ago is the probability of a soft landing is rising quite rapidly in the U.S. economy. It's primarily born out of improving productivity dynamics. This morning, we obviously got the corporate profitability dynamics. And so those two things are meaningful changes in the data. And one thing we'll say, going back to kind of the point I made in bullet number 3 for the executive summary, we're able to spot these meaningful changes in the data because we are systematic about our research process. We're obviously systematic about our risk management process as well. We're known for that, but what I don't think we're equally known for, and we will be over the course of time, knock on wood or Lord willing, is that we have a systematic research process as well. A lot of folks, when they do research, they go, well, I'm bearish, therefore let me do a bunch of research and point to why the economy is going to have a recession and really just kind of constantly just here's another bearish data point, here's another bearish data point, and they wind up in this rabbit hole, kind of chasing their original thesis. That is not a systematic research process. If anything, we would call that a confirmation bias process. Juxtapose that with what we are doing here at 42 Macro, which is irrespective of our modal outcome views, we are reviewing all of the meaningful economic releases that come out, not just in the U.S. economy, but in all the major economies in the world, day after day after day, week after week after week, month after month after month. We're analyzing the same data sets over and over and over whenever get an update, and this allows us to spot critical inflections in the data in real time, like 3 months ago when we said, hey, our corporate profitability model is actually improving, which should lead to an improvement in corporate profits, which we're now this morning, we're getting the data that said corporate profits are actually improving. And so again, it's not about, formulating, sexy theses and themes and then positioning for those sexy theses and themes. I think that's a terrible way to invest. And this is probably why most investors, the vast majority of investors, both buy side and sell side or retail, have not made much money in the last couple of years. It's because they're focusing on these themes and not being, sort of systematic and agnostic to their confirmation bias. So, just wrapping it up, I think you're going to do a lot better as an investor in terms of improving your process and ultimately improving your results if you take a spirit of systematization with respect to your research process and your risk management process into 2024. So sorry to go on a long tirade on a very simple question, but the reality is there's a probability of a soft landing has risen markedly, obviously at the expense of the hard and no landing scenarios. And then that's very much supported by the data. So we'll wrap it up there. Darius Dale presenting our macro minute for Thursday, December 21st, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.